Good morning, folks. My name is David Cohen, Vice President of Operations for PFL. We hope that everyone had a fantastic weekend. For us down here in Naples, Florida, it has been a wild ride. We are happy to report that we are back to full power and operations continue and, in fact, never really stop. All staff at PFL have power restored and all PFL staff are safe. The devastation on the ground is mind-blowing and TV does not give justice to the actual conditions. We'd like to thank the industry for its outpouring of concern and the many emails, texts, and phone calls we received. People have asked how they can help, and we would suggest donating any amount you can to the Florida Disaster Relief Fund. Any donation helps, and PFL has already made a large donation. Folks, a lot of bad stuff continues to happen out there. Not only do we have natural disasters, we have financial and political disasters all happening at the same time. The Dow closed lower on Friday of last week and down week over week 535.3 points. The S&P closed lower on Friday of last week and was down week over week 69.4 points. The Nasdaq closed lower on Friday of last week and down week over week 227.3 points. In overnight trading, Dow futures traded higher and are expected to open up this morning 100 points. Oil prices dipped on Friday in choppy trading, but notched their first weekly gain in 5 weeks on Friday of last week, on the back of the possibility that OPEC Plus will agree to cut crude output when it meets on Wednesday of this week. On Friday of last week, U.S. WTI crude futures fell $1.74 a barrel, or 2.1%, to settle at $79.49. U.S. commercial crude oil inventories decreased by 200,000 barrels last week, week over week. U.S. crude oil inventories are 2% below the 5-year average for this time of year. Total motor gasoline inventories decreased by 2.4 million barrels last week and are 6% below the 5-year average for this time of year. Distillate fuel inventories decreased by 2.9 million barrels week over week and are 20% below the 5-year average for this time of year. Propane and propylene inventories increased by 1.6 million barrels week over week and are 2% below the 5-year average for this time of year. Propane prices closed at 97 cents a gallon, down 8 cents per gallon week over week, and down 36 cents per gallon year over year. Oil is higher in overnight trading, and WTI is poised to open up $3.13 from Friday's close. Total North American weekly rail volumes were down 4.11% in week 38, compared with the same week last year. Seven of the AAR's 11 major traffic categories posted year-over-year decreases, the most significant decrease coming from the other category, which was down 14.72%. The largest increase was from motor vehicles and parts, which was up 20.62%. North American rig count was down by 1 rig week over week, and U.S. rig count was up 1 rig week over week, and up by 237 rigs year over year. The U.S. currently has 765 active rigs. Canada's rig count was down by 2 rigs week over week, and up by 48 rigs year over year. Canada's overall rig count is 213 active rigs. Overall, year over year, we are up 285 rigs collectively. Folks, we have a few things to share with you today, and we are watching. First of all, we were at the KCS meeting in Kansas City last week. 250 plus people were in attendance at Children's Mercy Park, a fabulous facility. KCS shared some key points in their presentation to attendees, and we'll give you some as follows. KCS fights above its weight class. They are committed to public service. They're committed to saving the monarch butterfly. In fact, they're planting 60,000 trees along migration routes. KCS's goal is to take as many trucks off the road as possible. They are very excited about auto hubs. Mexico has 14, while Canada has 11. They want to partner and cut private deals, transloading, etc. They want to cut deals on plastic, lube oil, and energy products. And they are very excited about non-hazardous bitumen. KCS has committed $275 million in new capital spending. This is now in front of the STB. They're also bullish they'll get approval to merge with the CP here in the near future. One presentation that we found very interesting and thought we would share some of was from economist Keith Prayer. He says the Federal Reserve has to slow the market down. The Fed's target is for an unemployment rate of 4.5%. There will be another 75 basis point hike, followed by a 50 basis point hike with a pause thereafter. There's a lot more on this in PFL's Rail Report today, a must read. We are watching Russia and natural gas and LPGs, a lot going on here. Folks, we don't even know what to think of this one, as we have crazy dealing with crazy, but the facts are that Russia's Nord Stream pipeline was blown up. Read all about it in today's Rail Report. We do these reports all for you folks, and they are absolutely free. Please pass on to friends and colleagues. Not only do we dive into more detail, as discussed in today's podcast, we also summarize the latest petroleum by rail numbers, talk about refinery runs, overall petroleum import and export numbers, and of course we have the latest pricing for all railcar types. You can't afford not to read this week's Rail Report. Bottom line, a lot of great information, a lot of fancy graphs, and as Curtis said last week, if you like what you see, please email squad@pflpetroleum.com with feedback. We really love receiving feedback, positive or negative. We are thick-skinned at PFL, and you will not hurt our feelings. We will learn from it. We do discuss internally all feedback we receive, and will change our ways whenever necessary, or sometimes we just give ourselves a pat on the back. Brian and Curtis from PFL will be in Phoenix this week attending the SWARS conference. If you are there, please give either one of them a call on their respective cell phones. Curtis's cell is 239-405-3365. Brian's cell is 239-297-4519. In fact, Curtis is already there. He had to divert from Kansas City because our airport is closed, so please reach out if you are there early. He may need something to do. PFL has been extremely active in railcar storage, return on lease strategies, subleasing, mobile repair, flaring, cleaning, and mobile scrapping, although the latter isn't what it used to be with the drop in steel prices. And we are looking for work, so please call PFL now. You won't regret putting our mobile crews to work. We guarantee to save you money and time, and if we can't, we wouldn't take on the job. Our number on the desk, of course, is 239-390-2885. Thanks for tuning into this week's podcast, and hope you have a great week.